Hi traders, it's another week of Technical Tuesday, so let's dive right in. Um, and starting off as we do per usual with the dollar. Okay, so the dollar has been on an absolute tear even after the weak headline payroll numbers. I'm not going to get into the specifics on it, but it wasn't as weak as the headline number would suggest for a number of reasons: unemployment, private payrolls. There was a big decline due to government payrolls being weak, seasonality issues, um, and then obviously we had that wage data, average hourly earnings, which came in above expectations again, which just feeds into this whole fears over inflation being stickier than many initially thought. So, it's comfortably above its former range resistance at 93.2. Price is trending nasty within its ascending channel, supported by the 21-day exponential moving average as price dips lower. Both moving averages are pointing upwards, supporting shorter-term bullish momentum. The RSI is fairly close to overbought territory, but still has room to run. Targets-wise, on the upside, 94.5, which we're pretty close to at the moment now. There's a bit of resistance there. Would be my initial target. Beyond there, 95 would come into play, which also sort of coincides with the upper trend line of the ascending channel. On the downside, zones I'd be paying particular attention to would be the 21-day exponential moving average here at about 93.7 and the 93.2 former resistance just above the 50-day simple moving average. That would be quite a big retracement though if price got back down there. But we did see that back in August play out, and price rebounded higher to continue its bullish trend. Moving on to the euro, US dollar, the euro has been under pressure ever since that German election, and it's really struggling to reclaim the 116 resistance level. We saw price tried to rally above the 116 level, but again has been pushed down lower to the mid 115 area. The moving averages all indicate bearish momentum. The 200 days rolled over, and the 21-day, obviously shorter term, more aggressively turned over, as well as the 50-day simple moving average. The RSI is, however, indicating some negative divergence. It's making a series of higher lows as price makes a series of lower lows. And it's just trying to move out of oversold territory. Shorting the rallies to me still seems like the right way to play Euro US dollar. On the upside, I'd monitor 116 and 117 above that area, which would have to also negotiate the 21-day exponential moving average. Been working well to cap rallies of late. On the downside, the round number 115 would be my target. I'm looking towards. Then moving on to cable. Cable looks like it's rolling over after its rebound from the 134 low. The 21-day exponential moving average doing well to provide some resistance, as well as the horizontal resistance there at 136 and 136.6, 1.366. The RSI also looks to be it's flatlining at the moment. The shorter moving averages are both pointing downwards, which will need to churn up for the bulls. Target wise on the upside, 136.6 would need to be cleared first. Then the 50-day SMA around 137.2 and would be the next level to monitor. On the downside, you got 135.5 and the low of 134 would be levels I'd be keeping a close eye on. Moving on to the US dollar Japanese yen, and it's just gone parabolic, really. It's surging higher as US 10-year yields aggressively go north. Price is now above its recent high of 112, and is in the low 113 regions. The move looks a tad stretched when looking at the RSI, which is in deep oversold territory. It's also quite extended above its 200-day simple moving average. So targets wise for the bulls, 115 would be the number on the board, but on the downside, 112 would be prudent to monitor, and below there, that 21-day exponential moving average, which should provide some support to any price dips. Then moving on to the old Aussie dollar, it's been making some nice moves off its two moving averages, seen some support there from the 50-day simple moving average and the 21-day exponential moving average. I've drawn in a channel pattern on the chart to help visualize levels which price could face either support or resistance at. The 21-day exponential moving average looks like it's close to curling up and crossing above the 50-day simple moving average, which would be short-term bullish. The RSI is peaking its head above the 55 level, which cap previous price rallies, and there's plenty room for it before it can be said to be overbought. Targets to have on the radar on the upside, I'd monitor 0.742 and 0.75 above there. And then on the downside, 0.73 and 0.722 support here, which sort of coincides with the lower trend line of the channel pattern here. Then moving on to commodity land, you look at the price of oil, another straight line. The momentum has been very strong on the back of that rotation because of the high gas prices. But I can't help but think maybe prices due a cooling off and a minor correction before another leg higher, before the bulls reload. Prices stretch quite far beyond its 200-day and 50-day simple moving averages, as well as being an overbought territory on the RSI. Could we see some mean reversion here? Potentially. Targets wise for the bulls, $85 would be the target to get to, and on the downside, $80. And below there, around $78, which is just below or a tad below the 21-day exponential moving average. Those would be the levels I'd be watching. And then lastly, to finish off with the shiny yellow metal gold. Gold's been under pressure since it topped out at 1830, formed a bit of a triple top pattern here. It doesn't look like conditions are going to improve either anytime soon. The 21-day exponential moving average and the 50-day simple moving average have been capping the price rallies. The RSI is below 55. It's now trying to head higher, which will be interesting if it does have a brief rally, as this has marked. You'll see for those triple top patterns there, the 55 acted as a bit of resistance or just above it. Targets to have on your radar, 1775 and $18 on the upside, both near the 50-day simple moving average and the 200-day simple moving average, respectively. And then on the downside, if price breaches this 1750 support level, then the next area I'd be looking to would be 1725 on the downside. Thanks. I hope you've enjoyed today's Technical Tuesdays, and I'll see everybody next week.